everyone. We are MBA student from IPMI Institute, MBA March 2025. We are going to have a review here with Hunter Group, Bapak Khaidir, Ibu Asrofah, and Pak Gatot. We are from Hunter Book are going to review a book which is One Up on Wall Street by Peter Lynch. So what is this book about? This book is about corporate finance investing in stocks as one of the assignment from our corporate finance class of Professor Roy Sember. So what we are going to have in this video, there are 3 chapters. We are going to ask our here participant. So Pak, who is the first? Bu Asrofah, I think, yeah. So Bu Asrofah, what do you think about this One Up on Wall Street on part 1? Yeah? We have several parts. What is this book about on part 1?
Okay,
Yeah.
part 1 is about preparing to invest. This part is talking about the groundwork of investing and the consideration that we have to know when we consider to invest.
Okay, so basically the background, the groundwork. Right? Okay. Next, after part 1 about investment, I think part 2 should be the strategies.
Part
Okay.
2, yeah. Part 2 is about picking winners.
Okay.
Focus.
What does it mean picking winners?
Picking winners is focus on strategies for identifying a successful investment. He explained how ordinary observation can lead to identifying 10 baggers.
Okay.
10 bagger or stock that can grow tenfold.
Tenfold, you means multiply.
Yes.
Okay. So the strategy, the basic, the strategy. And next, the last part is part 3. Pak Gatot, can you share
Yes, correct.
a little bit about part 3?
Yes, thank you very much. The part 3 is about the long-term view, how to develop and maintain a stock portfolio. Actually, Peter Lynch used historical and currents to demonstrate how market responses can unexpectedly from the significance of the news event.
So after having strategies, how to make it sustain
Yes,
on long term?
correct.
Interesting. We will have these details shortly. So let's just see the next details on our video.
This is the first part, which is preparing to invest. In these foundational chapters, Lynch crafts a guide for individual investor, blending personal stories, practical tools, and humor. In describing his transition from a young investor to a celebrated fund manager, he aims to dispel the notion that only financial gurus can navigate the stock market successfully. Rather, anyone can harness market opportunities. Lynch's own trajectory, marked by both success and challenges, highlights the importance of crafting a personalized investment blueprint. He encouraged readers to harness their unique life experience, advocating a customized investment approach. In discussing stock categorization and analysis, Lynch offered a strategic blueprint for navigating the stock market complexities. He explains its stock category: slow growers, stalwarts, fast growers, cyclicals, turnaround, and asset plays using example. This aims to equip readers to make decisions that align with their individual objective and risk appetite. Lynch's central message become clear. Investing is about empowerment and informed decision making. He advocates for an active investment approach, encouraging individuals to take charge of their financial future by leveraging this professional experience and insight and by performing through research. The initial chapter aims to demystify investing and empower readers with the knowledge and confidence to independently traverse the stock market.
Lynch categorizes stocks into various types and provides detailed analysis and strategies for each category. He advises against investing in overly trendy or popular stocks and stresses the importance of solid fundamentals. The book stratifies stock into diverse categories, each necessitating a distinct investment methodology. They encompass slow growers, stalwarts, rapid growers, cyclicals, turnarounds, and asset plays. Lynch dissects each type in depth, providing counsel on how to engage with these stocks based on their fiscal robustness and growth potential. The book also explores the timing of stock transactions, advising against market timing influenced by external elements. Lynch championed decision-making grounded in a company's evolving fundamentals and the progressions of its investment narrative. He outlines principles for determining when to invest stock across various categories and highlight the importance of grasping the rationale behind an investment. That's all for the part 2 summaries.
Part 3 is discussing about the long-term view. There are some words used by Lynch. The first one is design a portfolio. A strategy to design well-balanced investment portfolio is important. The portfolio composition better to own a mix of different type of stock, for example, slow growers, fast growers, turnaround, and asset plays to balance risk and reward. Lynch also advocates for a disciplined long-term investment strategy that is diversified across different stock categories and based on continuous research and reassessment of the companies in one's portfolio. Another one is the best time to buy and sell. The best time to buy stock is when you find a good company at a good price. Particular periods are end of the year's tax sellings and market downturns. So regarding selling timing, it should be based on a change in a company fundamentals, and Lynch's advice on buying and selling revolves around having a deep understanding of the company you invest in, rather than trying to time the markets based on external factors. Lynch discussed his skeptics toward investment gimmicks like option, futures, and short selling. He expresses a firm belief in traditional stock investment over this complex and risky alternative. Lynch reflects on his experience with how the stock market reacts to major news events. He emphasized the unpredictable and often counterintuitive nature of the stock market. In summary, he argues that despite this change, the fundamental of investing remain the same. One should focus on the quality and performance of individual companies rather than try to time the market or follow the market trends. Lynch highlights his constant readiness and commitment to being fully invested. Regardless of market fluctuation, he emphasized the importance of staying informed and maintaining priorities even mind unexpected market surges. That's all for the part 3. Thank you very much.
Okay, that's all the details of the 3 parts of our book One Up on Wall Street. Hope you enjoy our discussion and hopefully it is beneficial for you all. Thank you guys. See you on the next video.
Thank you.
Bye.
Bye-bye.